Hello, fellow Rebel Capitalists. Hope you're well. So we've got the tariff, tantrum, chaos, uncertainty, liberation day, retardation day, whatever you want to call it, 2.0. It's back in the markets. Do I know what's going on? Absolutely not. Nobody does, because nobody knows what Trump is going to do next. I don't think Trump knows what Trump is going to do next. But what we have to do as intelligent investors is try to get the lay of the land, figure out what's going on, any details that we actually do know, and then try to put the pieces of the puzzle together to figure out what's going to happen to interest rates, what's going to happen to the dollar, how's this going to impact the trade deficit, how's this going to impact the U.S. economy, the global economy. Let's dive right into it here. Let's do the screen share. Josh is MIA, swiping on Tinder or Grindr, of course. You figure out which one. And we're going to go over to Bloomberg. We'll start there. Global trade confusion. Confusion, I think, is a drastic understatement. I think it's more like global trade chaos because nobody knows what's going on. I mean, I did a live stream last night for my members of Rebel Capitalist Pro, and I was getting this question. I'm like, look, I don't know. There was this web of tariffs, which quite literally changed almost daily, was so confusing to begin with that now all of a sudden we have the Supreme Court decision, which says that these tariffs, at least the way Trump implemented them, was unconstitutional. Okay, so what happens to all the trade agreements that were based on those tariffs? Those probably blow up. I mean, if you're, I don't even know if a country wanted to maintain that trade agreement, assuming that it included tariffs with the United States, in which I don't even know if they could. I don't think they can. And I'm sure most countries probably don't want those tariffs and don't want those trade agreements, or would prefer a different trade agreement. And by the way, Trump's big stick here since day one of his second term has been the tariffs. That's what he's used as leverage for everything that he wants, whether it's Greenland, whether it's, putting it to China, whether it's bringing manufacturing back. It's all, or if he just gets mad at someone and he just wants to show them that he's powerful, he just threatens them with tariffs. Like, that's his big stick. It's really his hammer, and everything looks like a nail. So now that you take these tariffs away, what does he do? Well, Trump being Trump, he's going to try to, he's not going to say, "Oh, sorry, I was wrong." There's no way he's going to do that. He's going to say, "Oh, the Supreme Court's stupid. They're idiots." I'm sure he's going to try to replace them. I'm sure he can't, but he's going to try to do that or talk about doing it. They should all be fired. And then he comes out with a 10% tariff, but then like 12 hours later, he's like, "No, it's not 10%, it's 15%. So then you ask the question, okay, dude, if the tariffs are illegal or unconstitutional, how are you going to implement a 15% tariff? And he's got a way to do it, but it's only 150 days. It's temporary, which adds even more uncertainty and more chaos to the tariff mix. So let's go through this. We're going to go over to a Zero Hedge article as well to see what the EU is doing. And then we'll go through markets. And then I also want to go over the, who is paying the tariffs, because I think there's a lot of confusion around that as well. Because if you listen to the three guys up here on stage in this photo, it makes it seem like all these other countries were just paying these tariffs and we were just winning. I mean, we were just doing so much winning. We're just getting sick and tired of winning because the trade deficits were going down. We're making all this money. We're getting rich. But the reality is a far cry from the narrative that you heard or have been hearing from the three guys that you see up here on stage. So, and I know a lot of people are Trump fans. I voted for Trump because the whole free speech thing. But look, at the end of the day, you can't just be religious about this. You've got to be objective, for heaven's sakes. And we've got the data, the proof's in the pudding. And you also have to admit that this creates massive, massive amounts of chaos. And is that good for investment coming into the United States? At the end of the day, probably not. Okay, let's keep going here. So the key talking points from this Bloomberg article: Supreme Court nixed the reciprocal tariffs. We all know that. Trump administration plans to replace the prior tariffs with a new across-the-board tariff of 15%. It was 10%. And then Trump just, I don't know, too many people were making fun of him on social media, and his ego was a little hurt. So he's like, it's going to be 15%. I'm sure it's going to be 20% tomorrow, or 23%. It's going to drop down to 13%. Then it's going to go right back to 24%. Then it's going to go to 33.2%. I mean, it is what it is, right? You love them, you hate them. It's, that the 15% ain't going to last long. The EU has poised to freeze the ratification process of its agreement with Washington and other economies. And that's what I want to save for the Zero Hedge article, because they get some better detail there. So the first thing I highlighted, the Supreme Court decision, we all know that. But its trade agenda can pursue other avenues. That's what I wanted to highlight. That's from Mike Reed at RBC Capital Markets. That means little relief for U.S. companies and consumers paying the levies. Now, you may think that's, the Democrats saying that, but no, that's actually Goldman Sachs. And they're looking at the same data that I'm looking at, that anybody can look at, just Fred charts. And you can see import prices. Now, you got to remember that these import prices do not include the tariffs. They do not include the tariffs, right? So if the foreigners were paying the tariffs, you would have to see import prices going down, right? Because that means they're lowering their prices to compensate for this tariff, and therefore the hit is not going to any American entities or any American consumers, right? But so you'd have to see those prices going down. What do you see? The opposite. The price is flat. Now the prices are actually up, import prices. And again, that's excluding tariffs. So the foreigners are not paying the tariffs. You say, George, who is? Because the CPI is down at 2.4%. And 90% of the tariffs are being paid by U.S. importers. So U.S. companies that are importing it, and they're just having to reduce their margin because there's not enough aggregate demand, because the economy is so weak, the labor market's so weak, to pass on those additional costs, at least the majority of them, to the consumer. So that's really what's going on. And again, you can just see that with a couple of Fred charts, but you can see Goldman Sachs backing that up. So now let me keep going to the highlights here. Singapore's government will seek clarity from U.S. counterparts as to whether they are hit with the 15% global tariff applies to island nations. Singapore had been subject to the 10% baseline tariff, the lowest rate under. So there's going to be calls from all the countries saying, okay, it's a blanket tariff, but Trump being Trump, I'm sure he's going to have carve-outs for people that he likes, or that, say that Trump's the greatest thing since sliced bread. Like if you're the Singapore government and you come out and say, oh, that Trump guy, he's awesome. Tariffs rule. They're so great for everything and everybody wins. It's the greatest word in the English language. And then Trump's going to be like, oh, I like that guy. We're going to lower his tariffs down to 10%. That's just how Trump, it's how he operates. And by the way, that's why, especially at the beginning of his second term, so many of these corporate CEOs came out and were kissing his ass. Well, look, if you're a corporate CEO, you'd probably be doing the same thing. If you had a fiduciary responsibility to your shareholders, because that's how you get on Trump's good side. And if you can get on Trump's good side by kissing his ass and saying that he's great, he's wonderful, and he's amazing, then you're going to get the goodies. You're going to get the lower tariffs. He's not going to go after you and tell you to fire your CFO or whatever it is, right? So Singapore is probably going to take that same approach, but all the countries are going to come to him and at least try to get that 10, get the 15% down to 10. Indeed, officials across much of Asia were in wait and watch mode, which, look, replace countries with businesses. Because if the officials, the politicians in each one of these countries are like, whoa, time out. Okay, we were going this direction, but now all of a sudden we have to do a complete 180 because these tariffs are unconstitutional. But now Trump is coming out with 10%, and then he comes out with 15%. That's the only thing you can do is wait and watch. It basically creates this environment where people are frozen and they're just like, can't do anything. Just we got to wait a while and just see how this plays out. My point there is if officials are doing that, they have no P&L, right? They have no skin in the game. They have no billions of dollars at risk here. Guess who does? Corporations, businesses. So I can assure you, if the officials are in wait and watch mode, frozen in place because of the chaos, we'll just use the word uncertainty, businesses are doing the exact same thing. They say, we are ready to face all possibilities. This is according to Prabowo, is the guy's first name. Indonesia Presidential Secretariat. Sounds official. Indonesia only finalized its deal with the U.S. last Thursday. Thanks for coming. You went all that work to finalize the deal. That is weird, isn't it? If you were them, wouldn't you have waited until the Supreme Court came out with this decision? Because you know that this was a strong possibility that it was unconstitutional. So back to the drawing board for them. But then what makes things even worse for everyone involved here is, let's see if I'm sure I've got it highlighted, but right here. So what Trump is doing is he's saying, okay, these certain types of tariffs are unconstitutional. Fine. I'm going to use a different type of tariff. And this is under section, you can see right here, 122. So that's why what he's doing, he can actually do when the Supreme Court came out and said that the tariffs were actually unconstitutional. They were talking about a different type of tariff. That was my first question. So under this section 122, Trump can come out and just wave a magic wand and say, okay, there's 10%. Oh, no, there's 15%. Oh, no, there's 12%. Oh, no, there's 20%. But here's the catch. You can only do it for 150 days. It's only temporary. So what happens after 150 days? I mean, if I'm someone, put yourself in the position of one of these politicians or officials trying to negotiate with the United States. There's no way you're going to do anything for 150 days. No chance. That would be complete stupidity. Because in 150 days, Trump's big stick most likely is gone, unless he can pull out something else and just keep us in this state of limbo and chaos for the rest of his term, which I'm sure he'll probably try to do, because at the end of the day, it's not just, if we're being honest here, it's not just about the U.S. economy. It's not just about MAGA. It's not just America winning. It's really about Trump's ego. And to take those tariffs away from his big stick, if you will, his hammer, that's a huge blow to his ego. And Trump is going to fight like hell to try to get that back or resume control to once again gain that power that he had when he was wielding the big stick or the hammer. And unfortunately, it just is going to lead to more chaos, and more of what we've seen in the United States was a deterioration in the labor market, because no one's going to invest. No one's going to hire employees in this type of, under these conditions. And that's even if the economy is doing well. Now you say, George, all this manufacturing is coming back to the United States. We had all these countries committing to build these factories. And we had Saudi Arabia committing to, what was it, $1.2 trillion investing in the United States. Yeah, those were all commitments. Talk. And you got to put yourself in the position of one of these officials in another country. If Trump comes to you and says, hey, I want a commitment of $1 trillion. Okay, great. Sure. Make it a quadrillion. Okay, that's even better. They have no intention of doing it. In fact, Saudi Arabia doesn't even have the ability to do what they promised or what they said they were going to do. Commitments are just words. It doesn't mean anything. It doesn't mean anything, right? It's where the rubber meets the road is, are they actually doing it? And is it having an impact? And what we can see in the actual data is that they're not doing it and it's not having an impact. We'll get to that in a moment. So, my view is that if the Supreme Court came out and just made all tariffs unconstitutional to Trump, where Trump didn't have the 150-day tariff or who knows what he pulls out next, that would benefit the U.S. economy. Absolutely would benefit the U.S. That's probably the best thing for the Trump presidency and the U.S. economy right now, and to get him reelected, because that is going to bring down some prices. That's for sure. And it's going to be a huge windfall for the U.S. importers that are currently paying those billions and billions and billions of dollars. And it's going to free up capital for them to go ahead and invest and hire more employees and do what they do, grow their business. Okay, let's keep going here. And here, a heavyweight of Japan's ruling Liberal Democratic Party called the U.S. tariffs a real mess. I mean, I don't think that's Trump bashing. I think that's just, if you're being objective about it, you have to come to that conclusion. It's just, everything's up in the air. Nobody knows what the hell is going on. Now, here's what's really interesting. Lower levies. So for Asia, Morgan Stanley economists say the weighted average tariff will fall from 17 to 20%, with average levies on goods from China declining from 24 to 32. But here's what they say. Although it's a lower levy, it might actually lead to higher revenues for the United States. Higher revenues. Here's why. While the new universal tariff rate of 15 should theoretically mean slightly lower average tariff rate, it may be that a simplified tariff structure leads to higher realized rate, or I think what they're trying to say there is higher realized revenues. They wrote, reduced complexity leaves less room for ambiguity and fraud and lowers incentives to reroute trade through third countries. So the first thing that came to my mind when I read this is, okay, well, at the end of the day, a tariff is a tax. So if having just a flat 15% tariff is much better and we get more revenue as a result of it because it's way easier, far more simplified, why don't we do it for the income tax? Why not have a 15% across the board income tax? I know that there's been a lot of people that have been arguing for that for many, many years. Now, I don't like taxes in general, but if I had to choose one, I'd probably weight it on the consumption side. And then if I had to have an income tax, it would definitely be a flat tax for this reason. So I just wanted to highlight that because I thought it was interesting that they're applying this logic to tariffs, but very few mainstream economists, because they're all lefties and Keynesians. I shouldn't say Keynesians because not all Keynesians are on the left, but they're all lefties, so they love progressive taxes. President Trump really believes that tariffs work and that trade deficits are bad. Well, I don't know that he does. I think that Trump believes that tariffs give him a big stick and he loves the power. The ego loves the power. And I think Trump knows that definitely works. Tariffs work in that capacity, I should say. And that I would definitely agree with Libby on that one. So Libby says Libby is the managing director for public policy at PIMCO. Given the tools he has, we should expect tariff and trade policy uncertainty to last as long as Trump is in the White House. Totally agree. Totally agree. Okay, so now let's go over to the zero hedge. So what we've discovered here is the type of tariffs that Trump was using are unconstitutional. So as far as I know, as far as I'm reading here, he cannot use those anymore. But he has this 122 or under law 122 or whatever it is, that he can just make basically an executive order where he can put tariffs, broad-based tariffs across the board, but he can only do it for 150 days. So that's where he's getting the 10% initially and the 15% that is now in place. Okay, so now let's go over to Zero Hedge. Check out the EU deal, because the EU deal, or the EU, impacts the United States probably the most here. Let's read this here. In response to the EU's decision to freeze ratification Trump landmark deal, the U.S. president has come out swinging Truth Social with a Supreme Court decision that they will be met with much higher. Any country that plays. So Trump says any country that plays games with a Supreme Court decision, that they will be met with a much higher tariff. I don't know how. It's just Trump being Trump. It just isn't clear what the procedure for these tariffs will be. Aside from what we just talked about, it's Section 122, which is limited to 150 days. So here we can see imports from the EU, Mexico, Canada, and they're basically highlighting why this EU deal was such a, now I don't know if it's good or bad. I didn't get into the details there, but why it is such a big deal. In the aftermath of Friday's SCOTUS decision to reverse Trump tariff policy, one lingering question is what happens to the bilateral trade deals Trump struck with various countries? Well, in the case of the EU, we don't have to wonder any longer, because basically the EU put the kibosh on it. So right here, the EU said it would freeze the ratification process of its trade deal with the United States. The gal in charge there said they basically don't have any other option, which, I mean, you can see why they'd say that. There's no way that they can go through with a deal that's based on, tariffs or reciprocal tariffs or whatever the hell you want to call them, if they're now unconstitutional. Okay, so this is stirring up a lot of turbulence. I highlighted that because I think that's a good word. We've been using chaos, uncertainty, volatility, a lack of predictability, and then turbulence, I think, is great. And let's just rewind a little bit, because it's not just, okay, the tariffs are gone, now we've got 10 or 15%. It's the tariffs were so convoluted and so haphazard and so random to begin with. And here's an example of that. So I guess the Ursula agreed to a 15% tariff rate on most EU exports. But, of course, there's a carve-out, 50% tariff on steel and aluminum. Okay. But then, a few weeks later, Trump comes out and expands the 50% metals tariff to hundreds of additional products. I think that was right around Greenland. And then he pulled back the Greenland thing. So you see, you just, like, there's no way you could follow this. Like, it's impossible. Like, if you think the U.S. tax code is complicated, this takes it to a whole new level. And then once you got it figured out, if you think you have it figured out, it changes the very next day or the very next week based on, if Trump played golf with the guy or or it's just, so now what we're doing, my point here, is we're just layering another layer of complexity on top of the situation that was already insanely complex to begin with. And we're throwing a little spice on there in the sense that currently what is in place, which probably won't be in place tomorrow, could potentially be in place for only 150 days. So now what the hell do you do? Again, you're just frozen. So let's go over to the data. So I want to start with import prices. We talked about that earlier. And this, once again, shows you definitively who is paying the tariffs. And it's not foreigners. Right here. If the foreigners were paying the tariffs, this number would be going down. Now, I know a lot of people that are on, big, huge fans of Trump. They're going to say, well, what you're not doing is you're not accounting for this and this and this and this and this and this and this. Fine. That might change it slightly here and there. But the bottom line is if we were receiving billions and billions and billions of dollars as a result, basically, of these importers dropping their prices, right? And therefore keeping the same price for the United States consumer. So I know it gets a little confusing. Let's walk through that real quick to make sure we're all on the same page. Let's say that the widget starts off at $1. Okay. 10% tariff would take it up to $1.10. But then the US consumer would pay that, right? So what would happen in order for the widget maker in China to pay the tariff, quote unquote, they'd have to drop their price of their import down to, let's just say, 90 cents. Then once you add on the import, then you would be at 100%, you'd be at 100 cents, the same price that the widget was before. You see, that's the process. That's the mechanism to which the Chinese widget maker would actually pay the tariff. Okay. But what we're seeing is import prices not go down, but actually, here you go up as a result. And since this is excluding the tax, this goes to show you that maybe they're getting around it somehow, but the bottom line is the vast majority of the widget makers, using them as an example, are not paying the tariffs. Why? Because we can't make that stuff in the United States. So much of the stuff that's made overseas, we can't make here. And if we can, it's going to be at a way higher price. And it's going to take a lot more time to do it than just a year or 6 months. And by the way, we don't have the environment to do it, because the environment necessary to produce all that stuff in the United States is not chaos. It's not turbulence, volatility, uncertainty. It's the opposite of that. The environment that we would have to have, even if you want to say tariffs are great for bringing manufacturing back, fine. But what we'd have to have is consistency. And even with Trump at the wheel, right, before these tariffs were deemed unconstitutional, they were still changing. It was still totally haphazard, right? It was still all up in the air. So in order for these things to work, if they would work, which I don't think they do, but if we would have to have a stable environment, one that was predictable, not just what was going to happen over the next week, but what was going to happen over the next decade. And we don't have that. Therefore, I can assure you that no one in their right mind is going to invest billions and billions of dollars for a widget that they won't even produce for 5 years. No one's going to do that. You wouldn't do that with your own money. So why would you assume that some XYZ business is going to do it? Okay, now let's go over to the manufacturing jobs, because I know that there's going to be a lag, of course, but you would assume that if these tariffs would, over the long run, result in a lot of manufacturing jobs coming back to the United States, we wouldn't see the manufacturing jobs actually declining, going down. They're going down, not up. Let's just do it the last year here. That's what happens last year with manufacturing jobs. So again, I know that, oh, George, it takes time. Okay, fine. But if it takes time, you need certainty, not uncertainty. And even if it is going to take time, you should see this flat line or go up slightly, for heaven's sakes. Where's all the trillions and trillions and trillions of dollars that Saudi Arabia is going to invest in U.S. manufacturing? Japan is going to invest in building factories here. Or you would think that they'd be hiring somebody right now, just maybe to buy the dirt and start building the warehouse. No. And here's the trade deficit, because remember, tariffs were also supposed to reduce the trade deficit massively. And it is true that it initially increased the trade deficit, but that was because everyone was front running. And then they got all the goods that they needed here. So, of course, the trade deficit shrinks. But now what is it doing? It's going right back, at least the trend is going back to where it was back in 2024 before all of this started. So you can see that the result so far has been that the tariffs haven't done anything except be paid for 10% the consumer and about 90% American companies that are importing those goods and having to take a hit on their margin. That's the net result here, is that it's bad for Americans and it's great for Trump's ego. That's what we have so far. And if you don't believe me, just look at the data. So now let's go over to markets here. So Dow is down 700 points, which isn't, astronomical, but it's what you'd expect. Now, personally, if I was just betting on this, I would fade this because the passive bid is so strong that I don't think whatever's happening with the Supreme Court is going to derail the momentum of the stock market. What would derail the momentum of the stock market? Obviously, the Biden moment in the labor market, where everyone realizes, oh my gosh, the labor market's really, really bad, and we start getting negative GDP. So I didn't know that. Okay, this is a big change, even since we started recording, because this morning when I looked at the 10-year Treasury was down maybe 2 basis points. Now we're down 5 basis points. It's what you'd expect, right? It's what you'd expect, because people are looking out and saying, okay, well, if we have this chaotic environment, that's not going to be good for the economy. And the long end of the curve, as you guys know, is all about growth and inflation expectations. So you probably saw a big flattener here, meaning that the 10-year Treasury goes down quite a bit, and the 2-year's down too, but we are having a bit of a flattener where it's down 2.5 basis points, and the 10-year is down, call it more than double that, 5.7. So we're getting a flattening of the curve, which is pretty much exactly what you expect, because the 2-year is going to reflect more so with the Fed funds in the short end of the curve. So the 2-year not really budging, and it's doing that because, although CPI came in at 2.4, we had the hotter than expected PCE, which reduces the probability of the Fed cutting rates, where the long end of the curve really isn't going to pick that up as much in the overall price or the overall yield. Okay, let's go back to everyone's favorite topic du jour, other than the tariffs, the precious metals. So we got gold up almost 3%, exactly what you would expect. Silver up 5.66, not what I would expect. This one I would have gotten completely wrong. I would have assumed silver would actually be down slightly on the day and gold would be up, just because the industrial component of silver. Copper, no surprise there. Oil, basically flat. Okay. And Bitcoin taking it on the chin, down 3%. I think this is just risk off, right? Bitcoin trades like a risk asset. And if we have an environment that's not necessarily Liberation Day 2.0, but like a mini version of that, you would expect Bitcoin to go down, or all risk assets, really. All right, guys. So main takeaways here. The tariffs, as they were, unconstitutional. Trump comes out with new broad-based tariffs that he can do, initially 10%, bumps them up to 15%. But the catch is via this section 122 or law 122, whatever it is, they can only last 150 days. So now all the trading partners are stepping back and saying, wait, we need to renegotiate, or we don't even want to do that because we want to see how this plays out after 150 days, which makes sense. businesses are going to do the exact same thing. And then what's Trump going to do next? I have absolutely no idea. Nobody does. And that's why you're seeing the stock market go down. That's why you're seeing the long end of the curve catch a bid. In my view, that's why you're seeing gold catch a bid as well. So volatility, turbulence, I think is a great word. And we're just going to have to see how this plays out, because you never know what Trump's going to, love him or hate him, you never know what Trump's going to do. And you never know what obscure law he's going to pull out to maybe circumnavigate this after the 150 days. And you don't know what he's going to do during the 150 days. Like I said, he could drop it down to 3%. I'm sure he's going to have carve-outs for nations that talk kindly about the tariffs or kindly about Trump. And then for other nations that say, hey, we want to go back to the drawing board, then their tariffs over the next 150 days are going to go to 300%. Or whatever he chooses, right? Whatever number that he just randomly pulls out of the air. So is that going to be good for markets? Probably not. But is that going to have a major impact over the next 150 days? Probably not, because markets will just shake it off like they typically do, and most likely trend higher until they start rolling over due to a decrease or a deterioration in the labor market, or everyone coming to the realization that that's probably the direction we're headed. That's my take on it. All right, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market, capitalism. See you in the next video.